So, how do contractors typically report income on contracts for income tax purposes?
Contractors have many options to report their income for long-term contracts for income tax purposes. Contractors that average over 30 million in gross receipts over the prior 3 periods are considered large contractors. Small contractors are contractors that have less than 30 million of gross receipts over the prior 3 years. Large contractors typically use percentage of completion method to report their long-term contracts. The percentage of completion method allows contractors to recognize income and expenses as the project progresses instead of waiting until the project is fully completed. This method is particularly useful for contracts that expand more than 2 accounting periods. Since there is estimation in this accounting method, the IRS has considered there to be some look back rules that you have to apply each year. Small contractors have several options to report their long term contracts. They can utilize the percent of completion method. They also can utilize the completed contract method, in which revenues and expenses are deferred until the job is at least 95% complete. This method does not allow for jobs that expand more than 2 years. Small contractors can also be on the cash basis of accounting method. Revenue is recognized when cash is received, and expenses are deductible when the cash is paid for those expenses. The other method that small contractors can use is on accrual basis accounting method. This occurs when revenues are recorded as available to be billed and costs are recorded based upon when economic performance occurs.
What different accounting methods are available for 2024?
All of these methods that we just discussed are available for 2024, and each one has their own pros and cons. Keep in mind that special procedures such as filing accounting methods must be followed with the IRS to account for long-term contracts. Sometimes these accounting methods have to be filed before the end of the year, while other accounting methods can be filed with the tax return the following year. Having conversations throughout the year with your tax advisor is very important to determine if a different accounting method would be a benefit to the company.